Q2 FY25 earnings conference call hosted by Go India Advisors. As a reminder, all participant lines will be in a listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and 0 on your touchtone telephone. Please note that this conference is being recorded. I will now hand the conference over to your host, Ms. Monali Jain from Go India Advisors. Thank you, and over to you.
Yeah, thanks, Ryan. Good evening, everyone, and welcome to Data Patterns India Limited earnings call to discuss the Q2 and H1 FY25 earnings. We have the senior management of the company on call, Mr. S. Rangarajan, Chairman and Managing Director, and Mr. Venkat Subramanian, Chief Financial Officer. We must remind you that the discussion on today's call may include certain forward-looking statements and must be therefore viewed in conjunction with the risk that company faces. May I now request Mr. Rangarajan to take us through the company's business outlook and financial highlights, subsequent to which we will open the floor for questions and answers. Thank you, and over to you, sir.
Thank you, Monali. Good evening, ladies and gentlemen. It is my pleasure to welcome you all for Q2 FY25 earnings call. I hope you had the opportunity to review the earnings presentation available on both the stock exchanges and our website. Before Venkat presents the financial results, I'd like to provide a brief overview of some important updates and key highlights for this quarter. In Q2, as we have seen from our results, our revenue growth in the second quarter has been weaker than expected, primarily due to a deferment of a scheduled delivery from one customer worth 27 crores. Takeoff of this will happen in H2, and we're confident of meeting our FY25 revenue growth guidance of 20-25%. We're expecting order inflow of around 700 to 800 crores in FY25. We've received orders of 83.5 crores till H1. We have further received orders of rupees 82.7 crores in October. We're L1 for 227 crores, which we expect delivery within 12 months. We have a very strong bidding pipeline, and we're targeting for another 2,000 to 3,000 crores orders in the next 18 to 24 months. Despite the challenges in revenue, our team has been focused on driving operational efficiencies and improving the overall profitability of the business. This has resulted in improvement in margins. We are hopeful to achieve our stated guidance of EBITDA margin at 35 to 40% for the full year. Our order book at the end of Q2 stood at 971 crores. The order book as on date stands at 1281 crores, including orders negotiated. Our dedication to research and development has resulted in the development of several new products which have been planned to demonstrate to be able to participate in larger tenders and thus increase the TAM for Data Patterns. Data Patterns is strategically utilizing the proceeds from QIP to advance the product development initiatives. A significant portion of QIP funds have been allocated to expanding the research and development capabilities. We are leveraging that to drive the development of next-generation products that align with emerging industry requirements and technological advancements. We've been continuously recruiting talent to enable us to address the new product developments and ensure sufficient trained resources are available for the planned growth. Our total headcount was 1,504 with 1020 engineers at the end of Q2. We advance up the value chain by developing comprehensive systems using reusable building blocks and leveraging our existing competencies. This strategy has facilitated our expansion into new geographic markets, including Europe and East Asia, where we have successfully competed with foreign OEMs. Our sustained investment in products and technology, totaling 124 crores in capital expenditure over the last 5 years, and an anticipated CapEx of about 150 crores in the next 2 years to meet the anticipated growth. Our financial performance of the years reflects the strength of our business model and the effectiveness of our strategic initiatives. Despite decline in revenue, our gross margins reported are improved and are at 76%, up 700 basis points from same quarter last year. EBITDA was down 16% year-on-year at 34.3 crores. However, we were able to maintain the margins at 38%. Profits were at 30.3 crores, down 10% year-on-year, while margins are better at 33%. Our in-house designing and development are yielding better margins driven by operating leverage and prudent financial management. We have robust order book as on date of 1281 crores, where growth has seen across all verticals Development orders contributing 18% of the top line and production at 73%. Our diversified order book with significant contribution radar at 67% and avionics at 21% highlights our strategic positioning. Our order inflows during the quarter was lower than expected. On that note, in Q2 we secured the following orders, including production orders for export avionics worth 15.7 crores, production order from DRDO for avionics worth 6 crores. Keeping the sectoral tailwinds in mind, we are committed to sustaining a revenue growth of 20-25% and maintaining high margins between 35 to 40%. We aim to capitalize on the following opportunities: focus on fire control radars, X-band radars, and smaller radars for UAVs, ensuring cost competitiveness with in-house IP in radars. Develop electronic warfare products to meet the requirements of Army, Air Force, and Navy. Provide military radars, radio relays, and other equipment. At this point, I pass the floor to Venkat for his comments. Thank you.
Thank you, sir. Good evening, ladies and gentlemen. We are happy to present our financial performance highlights for Q2 of FY25. Let's delve into the overview of our financial highlights. In Q2 FY25, revenues were down by 16% to 910 million due to delay in delivery of order worth 207 million. Development contracts contributed to 18%, while production contracts 73% and service contracts approximately 9% in Q2 FY25, highlighting the diversity in our revenue streams. Electronic warfare and avionics contributed highest to the revenue at 48 and 19% respectively. Similarly, our order book stands at around 971 crore as on 30th September, with a good mix of both development and production contracts. We were able to improve a gross margin at 76%, led by better product mix. In H1 FY25, we maintained the revenues at 1,951 million, with gross margin at 74% and EBITDA margins at 37%. Our net debt-free balance sheet reflects prudent financial management. As of 30th September 2024, we hold over 557 crore in cash and cash equivalents, underscoring our financial strength and liquidity. Overall, we delivered a decent performance in H1 and are confident of a better second half and a steady growth momentum in the years ahead. With this, we will now proceed to the question and answer session. Thank you.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while we poll for questions. The first question comes from the line of Dipen Vakil from Phillip Capital. Please go ahead.
Thank you for the opportunity, sir. Sir, my first question is relating to your order inflow. So you have portrayed that this year we'll be getting somewhere close to around 700 crores worth of orders in FY25, and in next 2 to 3 years we'll be getting somewhere close to around 2,000 to 3,000 crores worth of orders. So, is it possible for you to tell us the kind of order pipeline which is there, which gives you confidence for such great order inflow? So, I don't want the numbers. I understand for the competition you may not be comfortable with numbers, but at least the areas where such tenders are out and bidding is going on.
Okay. As you are aware, our strength is in radars and electronic warfare as of present, plus avionics. And since we have done a fair amount of development across the radar platform for airborne radars, we expect some additional contracts in airborne radars to happen. Similarly, in electronic warfare, we have done some developments, and these are all critically required for our services and our development organizations. So we believe that these orders also will come our way. So these are two areas of contracts we're expecting. And regarding the other 700 crores expected, these are all, some of the orders already been executed. We expect repeat orders to happen, and some are new orders which discussions are in order with the customers, and the orders expected in the next 2 to 3 months' time to see that we execute all these orders probably in 6 to 12 months. So they are in advanced stage of discussion. I can't give you the exact order details, but that is how the numbers have been made up. Point 3 is we are also using the QAP funds. We are actually developing very large products. These are coming into some maturity now. The next 3 to 4 months' time, the first of the products will get announced. And we believe this will also find a fair amount of interest in the services, in Air Force, Navy, etc. So we expect maybe, based on our demonstrations, we expect some initial development contracts to happen, to then go through various levels of trials. So we are very positive on the order intake going ahead, though there has been a delay in the first quarter. This has been pushed for reasons beyond our control. But these are all happening. It's being pushed but not lost, so orders will happen. And on the other area where we are doing development, we're very, very confident or aggressive to see that this is coming out very well, the product's coming out very well. So we expect that this will really give the fillip for substantial growth in the company there in the next few years.
Got it, sir. So, and on the similar lines, sir, you mentioned that CapEx also, you are going to do a CapEx of close to 150 crores in next 2 years. So everything will be largely on the product development side, or there's something which will be there also from the infrastructure side, or maybe some other acquisition side of it. So how do you see your CapEx utilization in next 2 years?
So you're talking about asset 150 crores, right? You will say CapEx. CapEx, right?
Yes.
Yeah. It's basically we are planning infrastructure because in keeping with the product development, we've already got additional land, some building construction we are going to do, plus also all the test equipment and production infrastructure just to get generated. So this will take over the next 1 to 2 years, because once the large orders start happening, we need to have a streamlined production infrastructure to deliver on those requirements. These are all very complex systems, and these are not, it's not like a normal commercial system where quantities are there. Quantities may be large, but the value is very high. So there's a lot of tests and integration which has to happen. We need to have some infrastructure to do all of that. So we're planning ahead to see that these are all in place. By then the large contracts happen, we will have the infrastructure to start deliveries. So this we will be phasing it out in the next 2 years. We have an idea what to do. We have the land already available with us. So plans are on to see how we can build on it and all the other test infrastructure which we have to produce. So more CapEx mostly is in that area. Yeah, we are thinking about the other merger or acquisitions, but we've not really taken a stand on this at the present moment.
Got it. So last question. So you have mentioned that this year's growth guidance is close to around 20 to 25% growth. And next year, you are confident that you will be looking at an order inflow of close to around 2,000 crore in FY26. So is it, are we, and with the delivery timeline of close to around 6 to 12 months for the orders which are coming in, do we see it, is it like, can we assume that this we will be doing better than 25% growth in coming years, say 2 years down the line, versus the 25% growth that we are doing right now?
Your intention to grow fast, but I can't comment on that particular growth line now. I think we will probably wait for another 1 quarter before we see which orders are going to come and what timelines this can get delivered. Because there's a clutch of orders which we're expecting. Some will be delivered over many years, few years. Some has to be delivered in 12 months and 18 months. So we need to see which orders happen in the next few months' time, by which time then we can give you a proper guidance on next year deliverables and how the growth is. But our interest is to grow fast. That is why we have raised money to build products. Because though the initial growth is 20-25%, we would like to grow at a faster rate in the coming years. But how it's going to happen, I'm not at liberty today, because we need to see the mix of orders happening. We will be able to guide closer to the year end. We'll be able to give a guidance next year. But they are thinking a lot ahead on 4-5 years of delivery and contracts for 4-5 years. And that is why enormous amount of infrastructure and development we are doing today. You imagine 70%, 65%, 70% of the organization are development engineers. So you can imagine the amount of development which we are doing in products. And so Our focus is build in India, design in India end to end, so that we can compete with international companies in large format contracts. So towards that, we're putting efforts. I'm sure it will fructify in the coming years. But we will tell you more and more as and when things start happening. There's a lot of things in the mind, but it has to all become real. So we will wait a few months to see how the reality happens.
Got it. That's all from my side, and all the best for second half. Thank you so much, sir.
Thank you.
Thank you. The next question comes from the line of Nimish Sundar from Elara Capital. Please go ahead.
Yeah. So am I audible?
Yeah.
Yeah. Thank you for the opportunity, sir. Just wanted to check on something. So, sir, HAL has recently received the order for the Dornier 228 upgrade. So, will data patterns be playing any role for avionics in that?
We have quoted the Dornier 228 upgrade program. It depends on how HAL takes this further. At the point, I can't comment because the tender is in technical evaluation now. But we have quoted. So we'll have to wait and watch how HAL decides and how competition is there and what is their present level of thinking. We want to do this, but we'll have to wait and watch in the next few months what really happens.
Okay, so estimated timeline, we could expect something around in the next 6 to 12 months, some update on the...
Yes, 6 to 12 months, definitely they should take a decision because they need to deliver maybe in the year 2026. So they should finalize it. If I were a chair, I'll finalize it faster. So really, I won't know what happens. But yes, I think we should get some idea in the next 6 months.
Okay, thank you. And just another one more question I had. On the BrahMos missile, the speakers, is there any update on the speakers between you and the other PSU player who was involved? So any updates on that?
We are yet to carry out the live test. Every month they're saying this one. So I hope this month the live test happens. Once the test happens, we expect contracts to happen from seekers. Because India wants to do Indian seekers. We expect that to happen. But I can't comment because the live test happen. The real test has to happen. It is yet to happen.
Okay, thank you so much, sir. I'll get back in with you. Thanks.
Yeah.
Thank you. Ladies and gentlemen, if you wish to ask a question, please press star and 1. The next question comes from the line of Aman Soni from Invest Analytics Advisory. Please go ahead.
Hello.
Aman, if you please speak up. Thank you.
Am I audible?
Yeah.
Yes, sir. Hi. Sir, in last phone call, when we asked about the effect of delayed engine supplies to HAL from General Electric, you indicated that the company will be able to manage by supplying other products, and there will be slight growth in Q2. But if we look at the current numbers, it seems we were not able to do that compensation. So can you please throw some light on what went wrong for us in this quarter? And secondly, we are maintaining our guidance on top line basis for full year. So is it same for bottom line as well, like 30% growth we were targeting?
See, normally we try to keep some other contracts in case that doesn't grow, we do this. But in this case, it's not only one contract to be delivered. There are a series of other things also. There were some delays on acceptance or delivery delays are happening. So we are not able to compensate whatever we could not do. So this is probably next quarter or the next half year, we should be able to deliver it. That is why we're maintaining guidance of 20-22% as we predicted last time. That will go because this contract, all the products are ready. So as and when it is cleared for delivery, we will be able to deliver it. So we're waiting for that to happen. So it's got some shift. We didn't plan the shift firstly, but it happened nevertheless. As regards the guidance, idea is to increase bottom line more. But the contracts which we were expecting still not happened. So there is a shift in the contracts. So I'm hoping that the contracts will come. We're taking some advance action. I will be able to talk about it probably end of next quarter, better than what I can do. But we'll definitely maintain our whatever guidance we gave you last.
Like profitability guidance for 30% is maintained right now, right?
This is what we would like to do. As of now, it stands. We'll have to see whether the mix changes as we go along.
Got it, sir. Got it. That's it from my side.
Because the mix, whatever mix we're having, will give us better bottom line. That is why we said the 30% guidance. So we'll see how the mix goes at the end of probably next quarter of the year.
Got it, sir. Thank you very much and all the best.
Thank you. Ladies and gentlemen, a reminder, if you wish to ask a question, please press star and 1. The next question comes from the line of Somil Shah from Paris Investments. Please go ahead.
Hi, sir. Our order inflow for past 6 months is just 83 crores. So why is it so less? Any particular reason for that? Or are we facing any competition or something like that?
No, these orders have got delayed. This is not competition. We've not lost. Whatever we planned, we never lost the order. It is only get the shifting of the order book in the sense that inquiries have not come and it got postponed for reasons which we can't control. So which we all expected to happen in the first 6 months and got postponed to the second 6 months now. So we expect that we also negotiated with 220 odd crores is L1. That also should come probably in the next 1 month to 2 months time because the author negotiation order taking also takes time. But generally there has been a general delay in inquiries and contracts. Nothing to do with competition. We have not lost the orders.
Okay, so basically what we have guided for 700 to 800 crore for this year stands, we can get to that order book.
Yes, already it's 80 plus 80, 160, 170 crores received by October. Plus another 200 odd crores already we L1. So it makes it about 400. Another 300-400 crores are in the pipeline. There are a lot of inquiries are coming now. These are all single tender contracts. Whatever I'm projecting to you are all orders where we know for sure it will come to us. Whatever we project to you is not based on tender orders. Tender orders, we don't know which way it will go. So we are only projecting whatever which has to be ours. Unfortunately, some of them, the inquiries are getting shifted for some division at the customer end, and it is not beyond our control. But it will all happen. What will happen is they want to accelerate delivery. They'll shift the order, but delivery they'll want it urgently. So we are trying to take advanced action on those components so that when the order happens, we don't delay deliveries.
Okay. And for FY26, as we are expecting orders of 2,000 plus crores, so normally what is the timeline for delivery once we get the orders?
No, I didn't say FY26 2,000 crores. I have said 18-24 months, 2,000 crores plus 2,000-3,000 crores. See, this depends on the mix. I'm not able to say now because the product mix decides what delivery schedules are going to be. Some of them have a 3-year delivery line. Some has 118 months. Some is 12 months. So it will get a mix. So that is why towards the end of this year, depending on what contracts you're going to get on the delivery time you're going to ask, I'll be able to give proper guidance for FY26.
Okay. It was just, in the presentation we have mentioned that expecting orders worth 20 billion in FY26. So that's the reason why I asked you. Yeah. Okay, that's it from my side. Thank you and all the best for the future quarters.
Thank you. The next question comes from the line of Sushil Agarwal from NPCC. Please go ahead.
Hello.
Sushil, you can please unmute your line and ask your question. Since there is no response, we move on to our next question, which is from the line of Hardik Rawat from IIFL Securities. Please go ahead.
Thanks for the opportunity. Wanted a clarification on the capex guidance over the next 2 years. So this 150 crore rupees is largely towards R&D. What part of this will be towards the infrastructure building that you talked about?
See, R&D is shown differently. So all 150, we are talking only about capex in building test instrument, test facilities, and lines to be set up for production as and when it happens. It is just an average value. It is not exact number. The exact number will work out with board clearance in the next 1 or 2 quarters. But the idea is we'll be spending a bit more to see that infrastructure is created when production volume happens. so that we can address the production requirements.
Sure. And so what are R&D spends, what do we envisage our R&D spends to be like for FY25, and which areas will this be targeted at? In FY25?
We already we spent some 67 crores on R&D spend over the last 12 months or so, and out of which majority is actually materials, the inventory procured towards product development. We'll continue to buy materials and also build in certain areas. So this will go on to see that the products are getting finished. So that development is there, and the money has been earmarked for this development. That is why we've taken PAP funds to do this exercise. The product development mix is going to be in 3-4 areas. One is in radars, and these are airborne radars, which we're designing ourselves. Second is on electronic warfare suite. We're developing again airborne warfare suite. There is also ground systems on electronic warfare we are designing. The third is participating in some make-to programs on radars and EW. There's also areas where we're participating. Fourth is in communications, building our own radios, network radios and things like that, which is required for all Army, Navy, Air Force. This will be required as we go along. And so we're building Indian radios, Indian waveforms and systems like that. The 4 areas we're working on. We still have some additional money. We're trying to build on some satellites, but we just postponed that because we want to get clarity on how the business is going to happen. So we have complete competency to build our own satellites and launch it. The money is there. We want to be very sure how to spend the money until we get the idea of contracting what's going to happen. We postponed this a bit in time. As and when we get clarity, then maybe we can start spending the money. At the present moment, it is in the bank. But these are main areas where we're working on the present. And as we go along, there are new requirements from the market which is coming up. So the cash available is always good. We can address those opportunities quickly. And we have the early bird advantage because one good thing is that we do all of the system development in-house, from mechanical engineering for airborne systems to structural, whatever, all the electronics, the domain, the IP, and the test equipment infrastructure, the demand requirements for all of them. Everything is done in-house. So that gives us an advantage that we have a tight coupling of the product and design and a delivery time frame which is not practical for anybody else to buy and integrate to do. So based on need in the market with the customer, if we can address the need, we have an early bird advantage. This is what we want to try to leverage rather than going to foreigners and getting a tie-up and then building it here. We are putting this effort on building local competencies and products. So that is where it's going to go.
Sure. With regards to the delivery that got deferred in the current quarter, was this a GOI-related entity or was this for some external exports customer?
It's a GOI-related entity, but there's also an export customer. We're also talking to see if we can deliver next quarter. This is not last quarter. Products are getting for next quarter. Again, there may be some extensions in delivery. We don't know. We're trying to talk to them to see products are ready and we'd like to ship it. So we are going ahead to see what we should do. This business, has always been a last quarter business all along, capex with government. But what we've managed in the last 2 years, somehow stabilized it on a quarter to quarter with some kind of long-term contracts on hand. So we're able to mix and juggle and see that contractually we try to review out the cash flows and deliver quarter to quarter. But sometimes this happens that it's not in our control. Though we do the development production on time, sometimes the acceptance takes time, and then it goes over to the next quarter or next half. We need to probably, get more contracts so that this smoothing is possible, and also look at it. So that is how the company is working towards to see get a lot of order book. Order book size become much bigger. So then we can plan it based on even if there is going to be ups and downs in acceptance areas and lifting material from government, we still be able to keep an even out cash flow. We're working towards it. We're trying to build product mixed and contract mix such a way that we can give a more predictable quarter-to-quarter uniform kind of delivery. We're still there. We're trying to achieve it. We've done quite a lot of in the last 2 years, but this quarter we could not manage it. But we'll bounce back again. This is what we think.
Got it. And sir, in this 20 to 30 billion rupees worth of pipeline that you've talked about over the next 18 to 24 months, can you give us a rough idea as to what proportion of this could, come from non-government of India export orders?
See, today, export, we do export. We do some 100 odd crore export this year. We're planning to do. We won some nice contracts in Europe and in South Korea and also in UK. We built some products for UK. And it has done, and the UK products have done very well in the last few years, and they are all getting large orders. So back to back, we are also increasing the order on us, so that's a good thing. But see that our focus is at the present moment is in Indian market. See, in India, all along, we've been doing subsystems and components for DRDO. And the market for MOD has just opened up for full systems. It is our endeavor to see that we address the big market with full systems so that scale can happen, substantial scale can happen, not be a 500 crore company, get into 2,000, 5,000 crore company. We want to do that. So the market is there, and of course it's a slow market. It takes time to get the contract, but there are some low-lying opportunities, low-hanging fruits. If we can be quick, nimble, and the technology is outstanding, we will be able to address the market. So that is what we are trying to do now to see the next 2-3 years. We are nimble and very advanced products we are trying to design, which the customer would love to have. So we beat the competition and get contracts. So that's what we're trying to do. So we are doing this. Meantime, also looking at 4-year, 5-year kind of horizon where we can also win contracts with the MODI. So it's a mix of things we're trying to do to get scale. So that's where we are today. So this, I don't know when I answer the question. I'm not very sure.
20 to 30 million.
Yeah.
Billion. Whether it is largely exports or local.
So exports is going to be a bit less now because focus is not there. We need to focus on export. We want to put a separate export team and build that capability and competence because here today we are very R&D driven organization. So we need to move to a different marketing model to see that. We were internally thinking what is it we should do. We are planning to see what we can do there. The export takes more time. Why I've talked about Indian full systems and orders is once the full systems come in India and the first order intake happens, we start delivery, then these products can be exported to the world because these are complete equipment, not parts of our equipment. That will then really bring us the export 2 years down the line. We should start exporting. Now itself some inquiries have come based on what we deliver to customer here in India. We have got some contracts with Hungary, which is going to get delivered. Similarly, we get some contracts with UK for full systems. If these things happen, it is good. But then we need to put a lot of marketing orientation and sales process there to see that we can get the larger orders. But it will happen a bit slowly. Focus is going to be more on Indian full systems. That scale can happen substantively in the next 3 years.
All right. This is really helpful. Thank you so much and all the best for the second half.
Thank you.
Thank you. Ladies and gentlemen, if you wish to ask a question, please press star and 1. The next question comes from the line of Jyoti Gupta from Nirmal Bang Institutional Equities. Please go ahead.
Thank you for the opportunity. My question is, while our major contribution in revenue comes from radars, we also see that the biggest customer is Bell. We missed our estimates by the same proportion of, the delayed delivery. Is it because there was this delay in receipts from the Bell side or what? And second is, do you think such kind of delays in receipts to happen because our largest customer is Bell, and are we somewhere there's a delay in payments coming from Bell, so which might impact our third and fourth quarter numbers as well? The other thing is, while we are concentrated on the domestic part and exports are going to take a step back, how confident are we that the production, the development products that are there will has enough time for the next 3-4 years? Can you throw some color on this?
Yeah, I couldn't understand the second question. Let me answer the first question and come to the second later. First is radar contracts to Bell is not the largest contracts, and there is no delay with Bell. So it's not Bell that we're talking about. the delivery delay is not part of radar, and the assumption that it is Bell and they have delayed placement or a lifting of contracts is not correct. It is not Bell. So I'm not named Bell. It is not Bell anyway. So that is not one. Second is, in continuation to the same question is, if this is going to happen regularly, what happens really? See, I'll tell you what, some of the government institutions, based on their need, they lift material and sometimes postpone material because their own requirement to delivery may change because they buy material from so many people, and based on which they do. But what happens is after some time, they have to deliver, then urgent deliveries happen. So sometimes some shift happens. So, we need to be more, we need to take care of our requirement, get more contracts, rather than, we have no control over their lifting, delaying, deferment, all of them. So as an organization, I think we need to take care of that from our side and plan better. So this is what we're learning, that sometimes it happens, but we never expected that 1 or 2 quarters will continue to not keep delays. So that has affected us this quarter. We need to plan much better from our side. So we can't blame the customer for all this. We need to take care of it and see that. So we are working towards it. We are trying to develop further products where these products need is very high from the customer. So delays will not happen. The customer will push the institutions to deliver. So that is the focus we are trying to do, see that this kind of things don't happen. So that's the first part of the question. Second, I don't know what your exact question was, development, span,
so
any repeat question,
what I mean is that your concentration, your research and development part is commendable, and your information is more on developmental products and projects. Just wanted to understand, is there enough time for the next 5 years that whatever we are developing will be sold out in the next 5 years while maintaining the same margins, or do you think there could be some dip in the margins going forward?
No. What are the products we're developing now? We're developing because we believe they are low-hanging fruits and the requirement is large. Whatever products we're trying to do now, because see, one-off product development, one contracts, we will have to take it tender-based. We can't do product development against that because win or lose will happen on a tender. So we don't want to risk that. So whatever product we are trying to develop here will be required in quantities which will be delivered over many years, maybe 7 years, 5 years, 6 years, etc., 3 to 7 years. So this will be repeat production year on year. And these products which we develop, once we start getting contracts in India, they have the same requirements outside India, but similar requirements are also there. So that also gives you an export potential also. So we identified a few products like this, which has got a fair amount of scale, and the size of business is extremely large. Initial orders may be a few hundred crores, but subsequent to that, the production order is a few thousand crores. So we are trying to only look at such contracts because today, with the overheads and size of the business and the opportunities is there, they're not really looking at low value, small products, one-off contracts, get into one tender business. We may participate in 1 or 2, but that is more because we have a competency to do a little bit of value add we do, we can build the product. But that will not be a focus area. Focus area is long-term products. And yes, these are all should happen in the next 2 to 3 years. Production products should happen in 2 to 3 years. We cannot wait 5 years, 7 years. It's a long time to wait and do product development today because we need to live the next 5 years and scale the business. So we are very, very focused on how to scale the business in the next 3 to 5 years to much more, at least 3 to 5 times our size. We need to do this. So we're looking at products which will give us that kind of bandwidth, addressable market, and a long-term contract order book, a few-year order book on hand, so that this up and down and quarter to quarter should not happen. So we're looking really large business growth, and products coming out very well. Actually, outstanding engineering is coming out what we're doing, and we believe that the customer would love the products when it comes out. So we are very, very gung-ho, very positive on what we're doing in the short and medium term. Long term, we'll have to look at how to do this, but short and medium is what we're looking at now to bring stability and growth, substantive growth in the company.
So one more question. What about the Dornier side? In our last conversation, you said that you have done your part of avionics, yet the Dorniers have not been. There's some issue with the avionics part in terms of delivery of Dorniers. Is that resolved, or is there something, or have I missed out on the information?
So we have delivered whatever was told to us. We delivered in record time, radar and EW systems. We delivered in record time, 8 months to 12 months. We delivered a completely new airborne systems, fully qualified and certified and shipped. So they are undergoing flight trials now. So now HAL has taken a decision. How do they want to do? Do they want import? Can they look at Indian products? So the tender has come. So they will evaluate the TEC is happening. They'll evaluate the process and then come to a proportion. We are pushing, saying that we have outstanding products. It's really, and this is jointly done by DRDO and us. So this is a good product. It is world class. So it is Indian, and we can meet the delivery commitment. We meet everything. We tick the boxes. But it is for the HAL and the user to decide what they want to do. So I can't comment on it. But we have done our part, and we have to wait to see how it really plays out.
So we have competition from the international players, or is within domestic only you have competition, which is...
There's no domestic competition for us. In most of what we do, there is no domestic competition. It's all international competition.
Okay. And is our rate cheaper or they are cheaper? I mean, since we have done an excellent job, then we should be bound to get this, contract for Dorniers going forward.
Okay, we don't know what price is it tender. Nobody knows what other person will quote. I have no idea. We have an indication of what they will quote, but nobody know what they quote. So I can't comment on that. But it is not just quote or price. It's more on how India views programs from India and how decisions are going to be taken. We hope that we should convince them to take Indian product. So that's where we are. We've done our job, as I told you. Now we have to wait for we do the sale process now and see what really happens.
Okay. All the best, sir. I'm sure you will do very well. Thank you.
Thank you.
Thank you. The next question comes from the line of Saumil Shah from Paris Investments. Please go ahead.
Hi, thanks for allowing me a follow-up. So what is our current data days?
On a trailing 12 months basis, as of September, it is 243 days, which is in comparison to March 23, it was 308 days, and it has come down to 243. March 24 also we had 280 days. This is September is on a trailing 12 months basis.
Okay. So are we looking to get it down further by end of this year, or this is a normal, data days for our type of industry?
No, see, it all depends on the product mix, the order contract mix. Development contracts takes longer time because though we develop some products, and most of what we develop, most of the contract is our development. But what happens goes to a lot of trials and testing, sometimes field trials, sometimes aircraft trials. And until that is done, and some modification be required after trials. So these are development in nature, no? So there tends to be some delays in payment because there is some addition, subtraction happens. But more and more production contracts we get, then the payment cycles, because there is no new design validation, verification, and trials. So it goes to a normal acceptance process already done. So the better days tends to come down. Today, there's a lot of mix of development contracts we've done. We're delivering development contracts. That is why the extended timelines are there. We believe that this has to be brought down as we go along. It will happen over the next 1 or 2 years. More and more we start, our product develops, get into a series production, and then quarter-to-quarter delivery happens there, or month-to-month it happens. Or sometime in the next 2 years, we expect it to be month-to-month delivery, not even a quarter-to-quarter delivery. When these kind of things start happening, and that is 70% of our business, if we do that, you will see later days will come down substantially.
Yeah, because currently I think
that kind of product mix. See, we have to work on those kind of product mix. Today, what's happened is the whole business in India is DRDO driven and development driven. That's the only business we've been seeing. We've not gone into that production model where MOD tenders come in one, and most of those tenders are all going to Bell and HAL, and on a nomination basis, a lot of things happens. That's what is happening. Very few are really coming to private sector because the entire product should be available, and some of them make one takes a long life cycle to see that the orders are placed and all that. So this is a slow process. The government is clear that they have to shift the way we are doing, but it takes time to shift, and also for us the entire product to be there to position demonstrate. So this will happen over the next 2 years. But in the meantime, we need to see how to move away from the so large development to contracts to production orders. What we are trying to do is we are developing now our own products other than what we are developing products are there, which will directly go to services. So that is another area where substantive hardware can happen, delivery can happen. But again, in that, initially, some testing is involved. It will take a year, year and a half. Then it goes into production. But we have to move from this to that. Then the returns will come down substantially.
Okay. And so what percentage of our sales is to government companies versus the private companies?
See, all are government here. Very little private here. See, this HAL, BEL and all the large companies only are ordering because they get the large orders. And through DRDO, when you've done some product development, then they get the final order as a system integrator fully. They back-to-back order with us. So it's either PSU or the services MOD business is what mainly. Other than for this year, maybe more than 15% we do exports. That is all private, but we're exporting. But looking at India context, there's very little private. Slowly it will have to happen. The large organizations, Tata, L&T, whoever this, let's say Adani, all of them start getting large contracts, and where their consortium approach takes place, an ecosystem gets done in India, and we start developing products for them. Then the kick-in of private sector business starts. But till now, since they are not really developing also, they're all tying up with foreigners to bring products. The kick-in from India is going to be tier 4, tier 5 on components rather than subsystem systems like what we do. So it's going to take some time. The ecosystem has to kick in, after which we'll have Indian private sector. We are also talking to a few to say, why don't we do this? We need to create an ecosystem here, see that made in India is possible. But these are all in the work in process now.
Okay. So as of now, all India sales is all to government companies and exports are to private companies.
That's right.
Okay. Yeah, that's it. Thank you.
Thank you. Ladies and gentlemen, if you wish to ask a question, please press star and 1. The next question comes from the line of Omkar Chitnis from Trade Brains Private Limited. Please go ahead.
Thank you for giving an opportunity. Sir, my first question is, sir, how many contracts are you expecting to get from IT business by FY26? And how many patents do you hold as of now?
Well, come again. How many? What did you ask? First question.
How many contracts are you expecting to get from IT business by FY26? And how many patents do you hold?
See, whatever we get, it's a very complex phenomenon here. Whatever we get contracts is development is done by us, so IP belongs to us in terms of product development, everything, 100%. The number of contracts varies. It doesn't make sense to give you number of contracts. They give me 100 plus, but or 60 plus, or 100, 200. Small parts are also there. So that doesn't actually answer any question. But yes, all of them are designed by us. They are not a system integrator as now. All products are developed and designed by us. But this comes part of the tricky question of what IP we mean. So when we do with the government, sometimes DRDO, though we do the development, as part of the contracting process, the IP gets transferred to government. Though it is our IP, it also gets transferred to them. So that's a tough question to answer because that is the way the nature of businesses in India. Government wants to own all IP. So that is there. But we use the IP to build the next products and we take on from there on. And they do program-wise, we do product. So we differentiate with products and then grow the business. The second question is on whether we have patents. We don't have patents. We have one patent with MSTL long back, 10 years, 15 years back we did. But the focus is not to build patents. We're building products here. We're not doing basic research and which is patentable. Here the product IP belongs to us. We're building product. These products exist in the international market. So we don't want to really build any patents or process here. And we are not in that game at the present moment. We want to scale by building products. India is importing. And there is enormous opportunities in India. We want to address and build business here. So I'm not really looking at the patentable kind of developments here.
Sir, as you mentioned, you want to tap international market. Are you planning for any partnerships, any joint ventures with global defense companies for technology development?
We are getting orders. Already some 3-4 companies approached us and we are already building products for them. They are also increasing the size of order to us and getting a more product developed by us. Slowly it's happening because the last 5-6 years we've had excellent performance. Systems have not failed, they're working very well, so they're getting confidence. So slowly more and more companies are coming. We are also, but actively we have to do that. We need to have a marketing arm to see the proper development is happening. Today our bandwidth is more focused with the Indian programs, but I'm thinking of putting some international bandwidth, marketing bandwidth, recruit and train and address markets so that we start getting small orders and 5 years from now we want it to be a very big business. So we need to do that. We've not done that yet. We are getting some contracts, but that is not a sustained, marketing effort which we put. We need to do that.
Okay, so my last question is, so out of 971 crore order book, out of that, any orders from Israel, East Asia and European Union?
Israel, no. East Asia, yes. Europe, yes.
What percent of that order book, sir? Is it possible to?
We have about 100 crores of Europe and East Asia.
Okay, sir, understood.
And
thank you, sir.
UK is above from Europe, including UK.
Okay.
100 crores. I don't know exact amount, but it is 120, 130 crores or something like that.
Okay.
Thank you. The next question comes from the line of Sahil Karia from White Pine Investment Management. Please go ahead.
Yeah, thank you for the opportunity. So could you just let us know on the Dornier 228 platform, have you participated only for the IF platforms or also the Indian Coast Guard platforms?
So presently, the tender is, I think, IN. Indian Coast Guard will follow, I think.
Sorry, sir, I couldn't get you.
No, presently, the tender, I will answer the tender. I think present tender is for Navy. I don't know if the tender is for Indian Coast Guard. If Indian Coast Guard requires it, it will follow. The present tender, I think, I'm not very sure, but they don't tell us the end use. Requirement tender only has come, but I think it is for Navy.
So could you just tell us, for how many aircrafts or for how many platforms you all have the tender for?
How is that relevant?
So we can get the size of the order book or the size of the order that the company has for the Dornier 228 platform.
See, we have quoted a price. No, we don't want to disclose all that now on open forum. It's a tender which is still in process, so we can't discuss.
Okay. And so the next question is since we are spending our development money on the radars, different types of radars, and specifically on the airborne radars. So do we have any plans in entering GaN-based radars?
All are GaN-based. We've been doing GaN-based from 2014.
Sorry, sir?
Not today. All X-band radars which we have done is GaN-based. And the first radars we delivered to ISRO in 2013-14 for coastal surveillance radar which we designed was a GaN-based, SSPA-based system which is delivered in 2014. Full radar was designed and delivered by us. Then we won the contract for precision approach radar. We won about 380 crores. This is for 9 radars for Navy and Army, Navy and Air Force. That is also full KR module GaN-based, which was we won the contract and all the deliveries have been completed last year. All 9 radars have been installed. We are expecting one more order. The negotiations are over. The order should come probably in the next 2-3 weeks. All negotiations are completed. So that is also GaN-based only. Then we have some orders for transportable precision approach radar for Czech Republic and Hungary. That is also GaN-based. We delivered the Dornier 228 contract airborne radar, that is GaN-based TR module, AESA. Already delivered. That delivered in 10 months from the date of contract. Full airborne radar was delivered by us. We are now working on 2 other programs for helicopters and things like GaN-based. And then the new development and pattern radars are GaN-based. Everything is GaN-based. And this has been doing for the last 10 years. It's not today.
Okay. So if we have already developed the CAN-based radars and we are into it, so are there any plans to enter the Uttam radar or the Virupaksha radar for the Sukhoi platform that the IS is planning?
We want to do everywhere. We want to be the only source everywhere. So why would you not want to do? We definitely want to be there. It all depends on government, whom they address and what they want to do. But we are ready.
Okay. Thank you so much, sir. Thank you.
Thank you. The next question comes from the line of Sushil Agarwal from NPCC. Please go ahead.
Hello.
Yeah.
Hello.
Yes.
Can you hear me?
Yeah.
My point was actually recently HAL specifically, they have been awarded a huge project for Dornier, for other LCA, MK1. So are you expecting
Dornier,
then LCA helicopters and LCA helicopters. They have been awarded. Means what I know, they have been awarded recently in last 6